Hey everyone, so today we have a quick video for you here that we're going to show you how to use the Range Ruler indicator, which is a paid indicator. There's a couple ways you can get it, but just to be upfront with that, this one is paid. What you might find is even if you don't have access to this indicator, you may be able to take some of the information from this and use it with other similar indicators. So I would encourage you to just kind of hang around and see if that applies to you. Otherwise, if you're looking to use this particular indicator, you can get it in one of two ways. You can either purchase it outright at Kick Studio's website, which I'll leave the link in the description below. We also have 7-day free trials available there, so you can go to the same place and request a trial. Probably you're already evaluating the tool, I'm guessing. The other way you can actually get a hold of this tool is to join the Apex Trades subscription Discord, where one of the benefits of being in the first tier is access to this indicator for as long as you're a subscriber. Okay, so let's get right to it. First of all, let me talk about what this indicator is. It's called Range Ruler, and it's actually designed to help you find levels in your charts as well as ranges, to kind of help you predict where price is likely to go and where it's likely to reverse from or bounce off of. Okay, so at the core, this indicator started out as a CPR indicator, which stands for Central Pivot Range. And if you're unfamiliar with what a CPR indicator is, at its core, it's actually pivot points, or what we call floor pivots. I'm going to go ahead and show you how to add the indicator in here real quick, and then we'll talk about how we use these different levels. Okay, so if we go to indicators here, you'll find it under invite-only scripts, and you may have one or a few of these, but it's right here called Kick Range Ruler CPR M HV at ATR. And these are all the different types of levels that are supported by that. So just add that to your chart. Okay, and here you see some different colored lines added to the chart. One thing to note about pivot points, especially floor pivots or anything else, is that whatever unit you have it set for, in this case these are dailies, they will not change throughout the course of the day, and they're available starting at the very beginning of the day. So unlike other indicators that measure momentum and are actually lagging types of indicators, this is not a lagging indicator because the values are set at the beginning of the day, and so if you have forward looking, you know what those values are going to be throughout the rest of the day, and then of course they'll change at the daily switchover. Okay, so if you're only talking about floor pivots, you have a pivot point, which we have noted right here as with a P, and then you have above R1, which is resistance 1, and if I scroll out here, you could see there's more up here, R2, R3, R4, and to the bottom you have support 1, support 2, support 3, support 4. This is just how it comes out of the box. I'll show you how you can kind of tighten this up. In fact, right now I'll talk about this, that if you don't want to see the third and fourth level, you can turn those off, because a lot of times, most days, you focus around the space between R2 to S2, and some days you're like just within the central pivot range itself. Okay, so you could turn those on and off right there, but they are on by default. Now, if you are used to pivot points, you'll notice that there is a couple extra lines here in this CPR labeled TC and BC, which is the top channel and bottom channel of the CPR, which is the central pivot range. So the central pivot range is defined as these three lines right around the actual daily pivot point. So it's the pivot point, and there's a line above and below. And the way that these are spread out actually tells you a lot about the previous day's volatility. So if they're very far apart, then that means the previous day was highly volatile, and it's likely that today will be a ranging day. In fact, a lot of times it will range inside, between the top channel and the bottom channel. If they're very close together, then that means the previous day was a consolidation day, and it's likely that today will be a trending day. Okay. So you just have to kind of compare them as they go day to day to see if they're spreading out or collapsing together. Another thing that's kind of unique about the CPRs is there is this concept called a virgin CPR, which is one that hasn't been touched yet by price. So if you notice here, when price opened at the beginning of this day, right here on this candle, I'll circle it, that one right there, it opened below the CPR range, or the central pivot range. And so there is a very high likelihood in those cases that the price will actually be attracted to that CPR. And at least in this case, because we were below price, it'll at least touch the bottom channel. Sometimes it'll go all the way up to the pivot or even the top, but it'll at least touch the bottom before choosing a direction, and that direction being, up or down. I think we're actually with Bitcoin here in a ranging day. So, but it actually played out really nice where we opened here, we came up, touched along the bottom of this channel, and then we've started moving away from it. And this is why I think the CPR is such a more powerful indicator than just using pivot points alone, because notice we never touched the central pivot. We only touched the bottom channel in this case. And now it appears that we're heading down towards S1. Only time will tell if that happens or not. Okay, but then that is actually how we use these pivot points, or the expectation that we take from them. So here, as prices now has moved away from the CPRs, our target should be this S1. And if we reach that target, then our next target is S2, and so on, S3 and S4. So those become areas that the price is attracted to. Now, another thing to note is that as price approaches those, especially when you get to the extreme ones, S2, S3, S4, those also become points at which reversals are highly likely. So let's take a look at some other symbols here. Let's go. This one looks like it was pretty volatile today. Okay, if you take a look at this one, you notice, okay, we opened here, we played around the central pivot range for a little bit, and then price just shot up like crazy, broke straight through R1, straight through R2, and actually went all the way up here to R3, where it did reverse. And in fact, it had quite a significant reversal, reversed all the way back down, and now it's bouncing off of S2 down here below. Now, this is an altcoin with low liquidity, so you wouldn't normally expect Bitcoin or other larger coins to move this much during the day, but in this case you do. And one of the things that's like in Apex Trades in the Discord, we have a screener, and one of the things that we screen for is coins that are approaching these extreme pivot ranges, because the idea is that we can catch a reversal right there. And if we switch to a slightly lower time frame, we could probably see better. All of it stops along the way too. Let's take a look at another one here. Okay, I like the way this one looks. So you notice here we had the start of the day, we kind of came up, and then we came back to test the top of the channel pivot range. Then we went up, kind of past R1, but then came back and tested it before moving on again. And then up here at R2, we've had lots and lots of rejections off of that resistance. In fact, this last one right here, which looks like it was the one that went the farthest, actually has so far had the deepest reversal. That would have been a great trade right there. But then it stopped here and actually came back up and touched it again. And now we're coming back down. I bet we're probably actually forming a triangle here at this point. So that's the way that we use the pivot points in the central pivot range. Let me talk about some settings really quick before we move on. Showing tomorrow's CPR. So I'm going to go ahead and check this on so you can see what happens. Okay, so you see that it has put lines here in the tomorrow time frame now. So this is where the day ends right here. And the one thing with these is because price has not closed in today yet, so we don't know where the close is going to happen. We do know where the open happened, but we don't know where the ultimate high is going to be or the ultimate low. And that's actually how all these lines are calculated. So as you see, as the price is moving, these lines move too. So that actually can be, here's how it can be useful, especially if you're right close to the end of the day and you're waiting to see, okay, in 30 minutes, like the current lines that I'm looking at are going to become irrelevant and we'll have a new set of lines. Where are those likely to form? And yes, they can move a little bit, in that last hour, depending on how volatile your asset is, but at least you'll have an idea of, okay, so it looks like our pivot range is going to be higher. So that means, it's likely that we're in an ascending trend. Or if you notice that, it looks, especially if we were closer to the end of the day here, it looks like we're going to open the next day above where the CPR is projected. That's going to be then a virgin CPR again, which means that it's highly likely that the price will come back down at least to the top channel. Okay, so there's a couple ways you can kind of play with that, and that's why we have that feature in there to see tomorrow's CPR, even though the values will move. Okay, also taking a look at the monthly CPR. Let me switch here to a bigger time frame. And also I'm going to turn off the today CPR just because those lines aren't going to be that useful to us. These lines are basically identical to the daily CPR, except they're on a monthly time frame. I find this highly useful. In fact, let's go back to Bitcoin here, and I tell you like how I'm currently interpreting these. You notice that we're not very far into October here. We're 2 days in. So price opened October right up here. So we opened above where the CPR is. And then we immediately had this big pump that happened, and we like shot up here past the R1 for the monthly, and we've come back down since then. It is super likely that before the end of this month, which we have quite a long ways to go, this price will come down and touch this, at least the top channel of this. So I am expecting to see 26,700 again before the end of this month. And at that point, maybe we keep going down further, or maybe we just tap it right there and then we take off further. Okay, so it's just that's the decision point, but it's just going to attract price to it. Okay, and along those same lines, I think we do have CME gaps like right there, and another one right down here towards the bottom channel as well. Okay, so the monthly, highly useful. Now, some of you might ask, what about weeklies? Because a lot of other CPR indicators also let you look at the weeklies. From my experience, I found that those were not really that useful to me in just my trading style. I would be happy to add them in if people really demand it. However, there are so many levels and plots already, both plots and lines being drawn by this indicator, that we're actually right on the edge of what's allowed because of the colors that we're using too. It's silly. TradingView it like makes you count a plot twice if the color is dynamic. So with all that said, it was to add some of the newer features. It was actually easiest and best to remove the weekly, since no one hardly ever used it. And also we removed historical CPRs, which I know that is something that actually is pretty valuable. However, it makes your chart render really slow as well. So if you're needing to look at historical CPRs, I do have a version that I can make available to you. Just let me know, and I can give that to you. But like I said, your charts will run slow. Okay. Now, kind of moving on, we already talked about this R3 and R4 and how you can turn them on and off. I just do want to point out too that if you turn them off, it also removes them from the monthly. So even though, this applies to both today's and the monthly CPR. Okay, I'm going to switch back here now off the monthly, and you can have them both on at the same time too, just so you know. And I'm going to turn these M levels on, and we'll talk about what these are. So M levels they're easy to calculate. They're basically exactly the halfway points between all the pivot points. Okay, so like here's the pivot, here's R1, so there's an M level that's exactly halfway between those two. Okay, and they start down here, there's M0, and then you have 1, 2, 3, 4, 5. The way that you use these, this is actually a system that was developed, I think by Peter Bain. And so I haven't actually used this system myself. So if you want more information, I would suggest Googling Peter Bain M levels. You can find a lot more information about it. But the gist is this, that if you, during the course of a session, like a day, find that price moves from one M level to an adjacent M level, which Bitcoin has not done that. Let me pick something here that actually has. Let's see. Nope, that one didn't quite either. This one's getting close though, but we're running out of time in the day, so I don't think that one's going to play out very well. Let's find another one that, well, here, this one looks like it moved a lot, so okay. Maybe not the best example, but it did actually work. So, you notice we hit M4 here, and then we moved to M3. The way that the Peter Bain system, I believe, or at least one of the components of it works, is if you're successful in moving from one M level to another, then you should target the next one, because price will most likely move to that second one away. This one actually moved 3 away, and probably if we had another one, it would have moved even farther. So not the greatest example. Okay, so this one is perhaps a good example here, where we were at this M level, we reached this one, actually got rejected off of it a little bit, came back, retested it, broke through. At that point, good target would be this following M level down here. And as you see, this one just broke straight through that S1 and is on its way, and definitely could reach this M1 M level by the end of the day, because we have 4.5 more hours. Okay, so that's M levels. To be honest, I don't use those very much, but they were added to this indicator for those that use that. Okay. Here we have the ability to turn on the previous day's high and low and the close. And at this point, one of the things I want to mention is that when you're using pivot points, and let's say that you get a bounce off of the central pivot, whether top channel, bottom channel, or the center, but you have price moving away from that central pivot. Let's go something else here. Okay. Often you would target the next pivot point, R1, right? Or if it went downwards, you would target S1. The thing that you should know is that in most systems, the previous day high can be used instead of S1, or as if it was S1. So a lot of times, like in this case, it looked like that sort of was tried. It didn't quite reach it, but we poked way above R1 and almost hit the previous day high before coming back down. Same with to the bottom here. We haven't actually gone down yet, but one of the things you would want to watch out for is after it leaves this central pivot zone, if you're targeting S1, just be aware that it's possible that you'll actually get the price reversal here at the previous day's low. Okay. So I added those in. I have had requests to add the previous week high and previous week low in here because I know that's used in a lot of systems like the market maker system, and I probably will add that in soon. Okay. Okay, I'm going to leave this one on now and turn this off so we can move on and talk about historical volatility and standard deviation levels. So to talk about historical volatility, a lot of times when we talk about historical volatility, we're looking at it on a candle basis. Like we have a mean that is a moving average. Sometimes it's, moving average of something as small as like 14, sometimes as big as 50 or 100. But you're looking at that many candles. You're taking the average of them, so just a simple moving average. And then that becomes your mean, and then you can calculate the standard deviation across that range, and then find your, 1 standard deviation, 2 standard deviations, 3 standard deviations away. And I'll talk about why you would do that here in a minute, but just to kind of talk through the math a little bit, that's not what we're doing here. So one of the reasons that pivot points are so powerful is because they are a forward, they're a non-lagging indicator. And everyone at the beginning of the day gets those values, and they're all exactly the same. So no matter what time frame you are doing your trading on, whether it be 5 minutes, 15 minutes, an hour, 4 hour, doesn't matter. Everyone's pivot points are in the same place. Unlike if you are, say, trading with moving averages, where those moving averages will change as you move through different time frames. So all your traders that are out there are looking at slightly different numbers. Pivot points, same for everyone. This is also, by the way, why I don't have an S5 and an R5, which some indicators do have. However, there is no agreed upon formula for fifth range, the fifth support and resistance range and beyond. And so I could pick one and put it in here, but then that negates the power of the pivot points, because that would be a different potentially formula than other people would be using. And so it becomes a much, much, much weaker pivot. Plus the fact that it's so far out there at the extreme that it's so unlikely that you would reach them unless you had, some crazy, black swan event, in which case I think most TAs out the window anyway. Okay, so taking that approach, I didn't want to use a moving average to calculate our historical volatility in this case, because then we would have the same problem with a moving average. Everyone would have different numbers when you change different time frames. So instead, this is a daily historical volatility calculation that's calculated based on the data from the previous day. Okay, and from that we calculate, what the mean is from, a previous set of days, and then calculate the statistical likely or the probabilities on a normalized curve that you would expect the price to reach in today's day. So here was our close, and actually let me give you a visual here. Here's what I have. So in a normal distribution curve, you can see here that between -1 standard deviation and +1 standard deviation, you would expect 68.26 of all values to fall within that range. Now, if you want to calculate that, so let's take 100 minus 68.26 and then divide that by 2. That means that approximately 16% could fall above here and 16% could fall below. Okay, so what does that mean? Let's go back to our chart. Here is our +1 average. That's saying that there's only a 15% chance that the price today will close above this level. Okay, now 15%, that's actually, 1 in 6. So that's not, if you run this calculation over the course of a week, at least one of the days in the week, possibly 2, would actually do that and close above that 1 or close below the -1. Okay, now when you go up to 2 standard deviations away, back to our little chart, you see that's 95.44. So you see there's only a 2.3% chance that we would close above or below that range, outside the -2 to +2. And then you would also find, if you look at this last one, that's 99.72. Only a 0.14% chance of closing that on a daily basis outside that range. Okay, so it's not to say that it can't happen. Okay, but it's extremely unlikely. So this is a way of introducing probability into your calculus for how you do your trading, because this is all about setting your expected range for price movement. As far as where things close, this is used frequently in options trading, where you have like a certain time frame or day frame. In this case, this one's locked into one day, but of course you could actually tweak the formula and add multiple days out, and then of course what you would find is these ranges get bigger and bigger because of the daily component to that, or the time component to it. Okay. So that's one way of looking at that. And the other thing that we've added in here, before I move on, just so you know too, this is also a way that is used. These become support and resistance levels because, most of the trading that actually happens out there is done by computers, and computers are great at calculating math. And so that's one of the reasons you'll see these lines being frequently targeted by price. Okay, like in this case, this day, I see a lot of support and resistance happening right here along this 0.5 standard deviation. Okay, both from the bottom and from the top. All right, so moving on, the last thing we can add in here are ATR levels. So the average true range. This is another volatility calculation. And so what it does is it looks at previous days' volatility and the average true range volatility. This is another way of calculating an expected move for any given day. And I've used it frequently to help me set my take profits and stop losses. And so you notice how they're slightly different from where the standard deviation levels are. But what this is basically saying is from here, which was the previous day's close, today's open. Let me take a quick measurement from here to this one. X is 5%. That's huge. Oh, that's because I'm still looking at SOL here. Let's actually get off of that. That's just such a large range. It's so volatile. Let's go back to Bitcoin. Okay. And yeah, like I was saying, Bitcoin's just had a very non-volatile day. But again, from here up to here, it's still 2.5%. That's actually a lot. That's because the previous couple days have been pretty volatile. So excuse me. 685 is the number there, and if we go down, we get the same. My measurement tool is a little off because I'm kind of just eyeballing it, but it's around 2.5% in this direction as well to 1x. So what you would expect is, on average, we would expect Bitcoin here to move approximately a little less than $700 in this range, or 2.5% in any given day. And if we take the actual day's high to the low, currently we've only moved about half of that. So it wouldn't be surprising, if we moved, say, from here, down to about here. And again, even if we moved beyond that, this is just an average, looking at previous data. So this is, in a way, this is a lagging indicator because it's based on previous performance. Of course, anything can happen in the future, but it gives you a way of estimating what the likely moves are based on statistical analysis. Okay, and like I said, the more volatile something is, then the more you would expect it to move. And so this gives you a way of doing that comparison. Like, so if you want to build a trading strategy around, okay, I'm going to do my entry, but I'm always going to set my stop loss at the, 1x ATR in the opposite direction, because I don't expect it to move beyond that. And when it does, okay, it does. I have my stop loss there, but it'll be a way of you just not targeting things at random. You're really using some statistical analysis for that. Okay, the only thing else I want to bring up is that these levels, or this part of the tool, both of these have this compressed view as well. And like a compressed view just makes it so that the lines don't overlap and they're kind of thrown out here to the side, so that, like, and if I turn this on, I can be using, say, my CPR as my primary measuring range, but then also just have these off to the side so that I know where they are, but they're not really getting in the way. So if I turn these off, I'm just going to have, lines galore, cutting all through my price. So it's just a way of keeping things a little cleaner. Often I'll actually have this view on where don't use the ATR as much, but I have my SDs kind of set off here to the side. Also for these, notice you can actually change their color. If you don't want all these to be pink, you can make this one red and then this one green and yellow and orange, whatever. So you can set these up however you want. Just depends on, especially if you're going to use this primarily as your main tool are your standard deviations, then I would definitely set these as different colors and then leave your CPRs off. Okay. And the last setting we have here are just to turn the labels on and off. So especially once you know what colors you have configured and what they mean and what they are, you may not need the labels on there. So it's just more clutter you can get rid of off of your chart. Okay. So I think that covers everything about this indicator and how it's used. It does form the basis for some other things that we have and what we use in Apex Trades Discord, such as our screeners. And there's a screener companion that also uses CPR levels. And soon we'll also be using the standard deviation points as well. So I think I'm going to go ahead and leave it there. Hopefully you found this interesting. And again, if you're interested in how to get a hold of this indicator, because it's an invite-only indicator, paid indicator, I will leave links in the description that cover how to just buy it outright. It's a very inexpensive indicator, by the way, where we don't do, it has a trial and it's also very cheap. Once you buy it, it's yours for forever. Or you can go the other route and get a subscription to the Discord where you get access to it for free. Okay, I'm going to end there. Everyone, you have a good weekend or week, and we'll talk to you soon. Thanks.